Welcome to another stage analysis video. It's Sunday the 17th of December 2023. I'm going to start off with a look through the major indexes before getting into the regular member content. Start off the S&P 500, which followed through with a further continuation break to new 52-week highs this week. You can see it was a very strong week following the Fed meeting midweek. So we saw numerous breakouts across the board, further continuation breakouts, and lots of stocks actually moving into the earlier part of stage 2 as well. So percentage of stocks above their 50-day, 150 and 200-day moving averages has moved up to a stronger position at 63% currently here, roughly. So I think it's just over 63% at the moment. So still above its rising 5 and 10 week moving averages here. So still in a strong positive position. This covers the entire US market using the NYSE and Nasdaq data. So over 5,000 stocks. So following through, and similar action to what we're seeing in the S&P 500 here, which has now been making this continuation attempt over the last 4 weeks here. So if we move on to the daily chart, you can see it is extended low following that move on Wednesday. We did have an entire bar on Thursday and Friday above the free ATR level here, so the top of the ATR band. So the ATR bands run from the 21-day moving average to the 1 ATR, the 2 ATR and the 3 ATR band. So once we get above those, we tend to be a little bit extended in the short term. I did a video midweek talking about how all of the major indexes were above their plus 3 ATR level on Wednesday, and then we saw many of them actually push higher strongly on Thursday as well, which extended them even further. So in the short term, we're starting to get a little bit extended, but still in a powerful stage 2 position at the moment, with 83.6% of stocks in the S&P 500 above their 20-day moving averages here. So still in a strong short-term uptrend. And as you can see from the move here this day, we started to break above the pivot high here in the breadth, started to push through back through the 21-day moving average and the 1 ATR level before pushing up and out of this double bottom pattern when we were still in the stage 3 zone here. So now moving back to stage 2 at the moment. Nasdaq 100 doing a similar thing with 4 weeks or so now, actually potentially 5 weeks in. This was stage 2 continuation. That was your potential stage 2 continuation there. We started to break multiple pivots, so pushing on to new 52-week highs and actually getting close to the 2021 highs now. We're within a very small range here, so let's look. We're within 1% of the 2021 highs now, so looks like they're going to get tested in the coming week more than likely here. And we've got 81% of stocks in the Nasdaq 100 above their 200-day moving average at the moment. So again, strong position at the moment with the stage 2 continuation after a failed stage 3 move here. Looking at the daily, still at 52-week highs, still a little bit extended in the short term at the 3 ATR level, but not as extended as the other indexes like the small caps, which have pushed more strongly above that 3 ATR level there. So good short-term uptrend now, consistent. We've still got 89% of stocks above their 20-day moving average in the Nasdaq 100 here. So again, trending higher within stage 2 at the moment once more. Now, same with the Nasdaq Composite, broke above multiple pivot highs over the last month here. So back in a stage 2 continuation over the last 4 weeks now. So with some increasing volume as well. You can see the percentage of stocks above their 200-day moving average in the Nasdaq Composite, which is around 3,000 or so stocks at 44.68%. And this has had a dramatic improvement as we've seen some of the dregs of the index, the healthcare type stocks, the biotechs, etc., have started to pick up as well as the more speculative junk. So we've actually started to see this move back into a more neutral position, still 44.68%. So we're not even at the midpoint yet in the Nasdaq, so there's still plenty of room to the upside if this does want to continue into a stronger stage 2 move. But at the moment, just fledgling new stage 2 move after the distribution through August to late October there. Look at the daily, continuing to trend up here, so we're above the 1 ATR level here. So as you know, when we're above that 1 ATR level, we tend to be in a short-term uptrend. So at the moment, nothing not doing anything different until we see any kind of change of behaviour in the short term. Still in a strong position at the moment, and still in stage 2 with some increasing volume as it breaks back out into stage 2 once more. We've also got the NYSE, which again has got about 2,000 to 2,500 stocks in the composite index, which at 69.21%, so in a much stronger position than the Nasdaq composite there. We're in the bullish part of the chart, so anything above 60% above their 200-day moving averages is a strong market. So we're back into stage 2 now for 3 weeks here, finally clearing near-term resistance, which has been struggling to push through these areas all year. So making higher highs, higher lows. Again, a strong move over the last 2 months since the low back in October there. But again, a little bit extended in the short term here with 80.16% above their 20-day moving average and above this free ATR level here. So did pull back in a little bit on Friday, but still extended in the short term. So might need to pull back a little bit more. Ideally don't want to see it come deeply back in the range, but the 21-day moving average is still way below here. So it's got room to maneuver, potentially consolidate, still 2 or 3% above its short-term moving average here, and the 50-day just crossing back above the 200-day. So good to see the NYSE stocks, which makes up the banking sectors and the financials, the industrials, and some discretionary, etc. It's much more very important for this to be in stage 2 in order for the market to have a broad stage 2. And we do see a lot of the Russell 2000 stocks make up part of come from the NYSE as well. You can see with this we're also just attempting to move back into stage 2. So this week, first break above a weekly pivot there, did break a lower pivot back down here 3 weeks ago. We're now back at the top of the range again. So this structure that it's been in over the last 2 years, the sideways move, it could clearly still make a short-term high here and could start to come back in again. It hasn't broken clear of the range yet, but if we look at it on the daily, you can see it has made a new stage 2 breakout attempt. Got some pivot breaks through here, and now just sitting back at resistance and a little bit extended in the short term. Sit on Thursday above its free ATR level. The whole candle is above. You can see the low is above the free ATR level, so during the day there, and so when you get a bar above the extended range here, then that's when you're looking for some kind of consolidation or pullback, as it's clearly extended in the short term. 91% above their 20-day moving average in the S&P 600 small caps here as well. If we go back to the weekly chart, you've got 68.67% above their 200-day moving average at the moment. So again, above that key 60% level, and not yet extended on the upside. Once we start to get back above that 70% level and push higher through there is when it gets a little bit more to the extended side. So in a strong position at the moment, but not yet clear of this significant overhead resistance, which has limited it 3 times already this year. So in that at the moment, and extended in the short term. VIX continuing to trend lower here, still making lower lows, well below its 200-day moving average, which is our signal line for this. So if it starts to come back up towards its 200-day moving average, then that would be a significant warning sign, or even if it starts to clear some near-term highs. But if it continues this drift, then still in a positive environment at the moment for that. Look at the